Now I want to read you something from the dollarvigilante.com, Jeff Berwick, which I'm titling this one, Full-Fledged Global Ruin is on its way. Top hedge fund managers sound the alarm, he says. So, he says, when monetary control is centralized, as it is today, prosperity withers. The Wall Street Journal just surveyed top hedge fund managers and found a significant belief that full-fledged global ruin is on its way. Tamper with freedom, monetarily or otherwise, and you end up facing catastrophe. Now, you might shrug that off as nonsense. What do you, Jason? The markets are at all-time highs. Housing markets are back to the all-time highs again. What are you talking about? Everything is awesome. And cue the Lego music. If you're a subscriber of mine, you know that's a crock. And you know these quote-unquote top hedge fund guys who have been essentially saying that full-fledged global ruin is on the way, they're pretty sure of it. I'm sure they've seen the market highs once or twice in their lives and realize what happens after that. But we also have a system that's completely rigged, controlled by the banking and elite shadow government, etc., in collusion, cahoots is what I meant to say, with each other. So yeah, maybe cohesion. That's it. Cahoots and collusion. They're in cohesion. So he says that's just where we are today. The managers pointed directly at the purposeful monetary mismanagement of central banks around the world. These central banks, large and small, are pumping oceans of money into financial markets as well as lowering rates until they are actually negative, which has never happened before in recorded history. When the final catastrophic implosion eventually occurs, we will look back on this era with amazement, wondering how people didn't sense the disaster to come. Here at the Dollar Vigilante, we've been quite aware of what's going to take place right from the start. Even our name, the Dollar Vigilante, speaks to our awareness of the world's impending monetary ruin. It's kind of like me and my name, Realist News. I want to keep things real. I'm not going to pump fake stuff. I'm not going to tell you something because it makes you feel good, cheers you up for the day, give you fake fluff nonsense, give you some stupid quote on Facebook, I'm here to give you whatever the hell is happening, whatever the hell is important, whether that's good or bad news. You can still make a good decision from it. Bad news, train's about to crash in your car on the way to work. It's going to kill you and your kid in the back. Oh, terrible news. But I'm now enlightened. I think I'll leave a little later today or earlier, or I'll take a different route. Thanks, J-Snip. You made my life better. See, the information will make your life better. But it's going to bother you because you don't like what I'm essentially telling you that your matrix is an illusion. You're living an illusion. And every day I come out here, video, 2 videos, 3 videos, to say, look at this is happening. Look at this. Look, I just did a video. The car dealers, the big three, they're closing down again, the factories, due to a gluttony of unsold vehicles. And I thought it was just GM and Chrysler at first. Then I kept reading, oh, Ford's down there too. The big three, it's a big, let's get back together club. So now we're going to see what we saw with Bush. Bush is leaving office. Here's this mess. Car industry failing, banks failing, housing failing. Here you go, Barack. Barack takes over. Massive, unprecedented bailout. Massive increase of the national debt. 10 trillion turns to 20 trillion. And now he's saying, here you go, Trump. And Trump's already been saying, I'm ready to spend. I am ready to spend. But put people back to work in doing so, which is a whole lot better than what we saw previously. Still, borrowing yourself into prosperity never works. You can't get yourself in the debt into prosperity. Not going to happen. Can't wait to see what he does, though. Okay. We were something of a lone voice because people have a hard time visualizing that King Dollar can collapse. But before all of this is over, not a currency or economy will be left standing. We'll probably have to start from scratch, he says. We've said for years that all of this ends in a rock and a hard place scenario. The two options are to stop the money printing and interest rate suppression, leading to a catastrophic crash and depression of biblical proportions, or to continue with it until we reach hyperinflation, leading to an even worse catastrophic crash and depression of biblical proportions. For now, they continue on with the game. And the longer they continue playing this game, the crazier everything will get. The European Central Bank, for instance, just announced it would extend its what they call asset purchase program until the end of 2017. Its balance sheet will soon be larger than the Federal Reserve's. And by the way, it's sitting at about $4.5 trillion. The Fed has not been buying bonds for years as part of its quantitative easing program. According to these managers, the time is nearing when the world's overstuffed markets simply won't be able to absorb more cash. The final collapse may be a sudden, unexpected, major bankruptcy, or perhaps a country-wide default. Or maybe the monetary strategy itself will cause the final damage, as some managers interviewed by the Wall Street Journal suggested, such as this. There's no non-messy way out of this, said Luke Ellis, chief executive of Man Group. Man Group, do you guys make man caves by chance? Or one of the world's biggest hedge fund. Oh, okay, sorry about that. Man Group, you might make man caves or something. You might actually produce something for people that's useful rather than shuffling financial paper back and forth. I was wrong. You're a big hedge fund, one of the world's biggest hedge fund firms with $80.7 billion in assets. Quote, there's two versions of how this ends, he added. Either central banks could move to so-called helicopter money, where they buy debt from the government, which then spends the proceeds or gives it to the population to spend. This, for a few years, looks golden, then leads to hyperinflation, he said. And again, if you want to go that route, that's Donald Trump. We're going to spend, but we're going to put people back to work in doing so, and we're going to party like it's 1999 until the music stops. Which is, as he said, hyperinflation comes into play. He says, or the speed at which money circulates within the economy could grind to a halt. Then you effectively have a barter economy, he said. As is normal with government programs for central banks, despite their so-called independence, are basically government monetary entities. The easing programs are actually doing the opposite of what they were supposed to do. For instance, the ECB has purchased $48.2 billion, or $51.2 billion US dollars, of corporate debt in about 6 months' time. But the buying hasn't been accompanied by private sector participation. The selectivity that markets are supposed to encourage is lacking in this case. Securities are purchased with an eye towards stimulating growth, while large private sector investors grow even more skeptical. With so much money flowing into markets indiscriminately, it becomes impossible to win out deserving companies from those that are not. Additionally, aggressive easing over the long term encourages social dysfunction. Low to negative interest rates eventually bankrupt retirees and savers, while those who have significant assets grow richer, because a low interest rate environment yields significant, if short term, business opportunities, while assets generally keep up with inflation to a point. The most disturbing point that the interviews with top managers reveal involves a hard stop. These managers say what we've long understood. Once central banks sustain too low interest rates over a significant period of time, there's no going back. There's no way out. Ruin on a vast, worldwide scale is the only inevitable result. Government debt to GDP levels continue to rise while investors pour into markets that are only an inch from collapsing because they have nowhere else to go. What we keep in mind here at the Dollar Vigilante is that these have long ago ceased being normal markets where normal investing can yield results. Even the world's largest firms are in chaos, and if you're going to take positions on a variety of fronts, you have to think in ways that you wouldn't have before. For instance, Deutsche Bank is in terrible shape, likely bankrupt as a matter of fact, but we're also well aware that in this day and age, large institutions are basically exempt from market blowback, especially ones as large as Deutsche Bank. Knowing this, we suggested subscribers buy both out-of-the-money puts and calls on Deutsche Bank. The strategy costs $1.35 to put on 65 to 70 cents, it looks like, for the puts and calls. So we're up 200% on the strategy, or almost 500% on the calls alone. We knew that Deutsche Bank could go to zero, but we also believed that one way or the other, at least in the short term, various kinds of bailouts were likely to be arranged. So we hedged our bets and won. He posts a little conversation back and forth on, looks like Facebook, of them talking about that strategy. Again, you sign up for Dollar Vigilante, and they will share their, essentially their portfolio, what they're doing. I recommend a call on this, I put on that. They do it, and they have a pretty good track record. Because I did sign up last year. I was more interested in the miners, silver and gold mining companies, juniors and whatnot, and I got a little peek at that. But I keep telling myself, yeah, but if I do any of that, if I get involved in any of that, I'm playing the paper market. You could certainly argue, well, play it while it's still available to play, Jay Snoop. You could be in there making 100, 200%. You're right. But I just don't want to play that game. I just don't want to participate in that paper game. As much as Dollar Vigilante has some great information. So he says, this is important to take note of. Here in our daily blog, we give our general overview of what we think is going on, but we give much more detailed information and strategy in the newsletter, which you can subscribe here. I will link this website to you in case anyone wants to check this out. For example, while we said that the Shemitah and Jubilee timeframes could see a major crash, and there were many, including the August 2015 crash, China, and Brexit, we also told subscribers to use far out-of-the-money put options to play the crashes because there is also a risk of continued central bank money printing, which can push the stock market much higher, albeit lower in real terms. Through this strategy, we made 4,500% in 3 days last August, which many subscribers made fortunes on. Throughout 2016, we warned that Jubilee year could bring an immediate market break and numerous economic and military disasters, but we also pointed out that, as it was with Shemitah, much of what was taking place during Jubilee could be seen as laying the groundwork for further disasters. In fact, these hedge fund managers are talking along exactly the same lines. What has been done via government monetary policy has not yet matured into full disaster. But as they concur, the disaster is nearly here, and what's worse, it's inevitable. We've shaped our entire approach to markets and news analysis around our understanding that Western monetary policy is untenable. It's allowed us to position ourselves in such a way as to turn potential losses into significant profits. Our subscriber base, as you can see, has been handsomely rewarded as well. I anticipate that 2017 will be a good deal worse than 2016 by an order of magnitude. There's simply no way global trends can continue as they are now. Cash confiscation, negative interest rates, and aggressive central bank monetary manipulation will take their toll, and the results will be ruinous for most, but not for us and our subscribers. We've built an entire library of books and reports to help prepare you for the inevitable, and we regularly make big gains on trades along the way. And we have an entire network of like-minded subscribers around the world who are happy to help you prepare. These are not normal times, and CNBC and most financial advisors are not going to even have the slightest clue of how to help protect you or help you profit during these extreme times. To protect yourself, take advantage of our free book offer, Getting Your Gold Out of Dodge, which is the name of their book, to help you secure and internationalize your precious metals by clicking here. So again, I will link this article in case any of my subscribers who happen to play the markets want to join the Dollar Vigilante to listen to what they have to say. And I can say their calls on the miners and stuff were right. If I had gotten in back in November, December, when I did do a video about these guys, or this guy, Dollar Vigilante, Jeff Berwick, I told you essentially what he was saying. And then the mining companies shot up like he was expecting. And could have made some quick bucks, right? But again, I feel like I don't want to be a part of it. Because like if I'm a part of it, I'm part of that, that system. And it's hard for me to just do it. As much as I see great returns and stuff, well, I could just throw a grand out here and there, Wouldn't hurt if I just took a grand out, would it? Take a grand out and, once again, Jason at For Luck, go out there and do it. Margin call, something happened, put, your calls on this level, I do it, put your stops in place, and I get crushed. Margin call, well, I don't want to play on leverage. Sorry, margin call somehow, get screwed some way or the other. Anyways, last video. Take care.